Spectrum, and hi Gilbert. Nice to meet you guys. And thanks everyone for coming back again to another session on risk management. Right. So last week we covered advanced trade management topics on how you can better fine tune your stop loss and take profit, and 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 knowing how much to risk on each trade, right? So we just touched on that a little bit last week. So this week, we really want to zoom in, right? We want to zoom in on the concept of how much should someone risk on a trade. All right, so before we begin, I'd like to give you a short introduction of myself and the agenda for today, right? So guys, today what we will be covering is we'll be covering what is the ideal lot size you should trade, what is the ideal risk percentage you should put per trade, and we have a small little quiz on lot size calculation, right? It bears a lot of similarities with what we did last week. And after that, we will go on to a structured approach to deciding how much you should risk on each trade, right? And I'll show you the different methods I use. I'll show you the different methods I use to give you an idea on how much I determine to risk on every setup. And at the end, just like last week, we will have a pretty exciting giveaway again, right? There was great participation last week, and we gave away quite a lot of prizes. I know some of you guys didn't get the prize, but don't worry. Today you get another chance at it. All right. So before I go any further, I'd just like to share with you, Desmond Leong. I'm an analyst at AxiTrader and also run Everest Fortune Group. It's an award-winning research team, and we are the finalists for the Technical Analyst Award for Best FX and Equity Research, along with being a certified Singapore fintech company. You would have heard of us on radio, on TV, and we provide a lot of analysis for a lot of the banks and brokers out there. So today I'll be sharing with you, right? Today I'll be sharing with you from an institutional perspective how much you should risk per trade, right? I have adapted it to MetaTrader 4, to MT4, because I understand that is what all of us are much more familiar with, right? So I'm not going to talk about 100,000 positions here and there, right? Rather, we'll be talking in terms of MT4, what is a lot size, and 0.1, 0.2 lots, right? We'll be referencing that. All right, so let's begin. Right? Okay, and you know what? Before we begin, here's a disclaimer, right? Please read through this disclaimer, right? You should know that CFDs are really complex instrument. They're high risk, and nothing that is said here constitutes like investment advice. You should always seek your and do your own independent research before making any investment decisions. Okay, and I know one of the most popular questions. One of the most popular question, right, that was asked last week is there a recording? Are the slides, will the slides be sent to you guys? Yes. With a recording, yes too, right? But you don't get to participate in a lot of the asking of questions, which is where the real learning, which is where the real learning happens. All right. So now let's go on to what is the ideal lot size. All right, what is the ideal lot size, guys? Let's participate with me over here, right? I just want to see based on a $50,000 account. Okay, so not on a $5,000. Just imagine you have $50,000 in your account. What is the ideal lot size you should trade? Right, you should put onto each trade. Right. I guess we have a chat function, a question function over here, right? So now is the time for you to get familiar with it, right? And your response is very important to how we further craft this webinar. So please just take a few seconds to answer, right? What is the ideal lot size on MT4, assuming, right? Let me see if I have my little trusty pen, right? Assuming you have a $50,000 account, right? If you have a $50,000 account, what is the lot size you would put? I can see some people are already answering 0.3. I can see some people, we have Mohammed saying, hey, Mohammed, nice to see you again, right? 0.3 is from Stefan. We got one lot from Mohammed, right? Some people say 0.1. You know what? I'm just gonna pull this section out because we're getting a lot of answers. Vera, I like your answer, Vera, right? Imad, your answer is pretty good too, right? I can see Tony saying it's up to your own risk tolerance. We've got a lot of answers coming in, 0.3, 0.1. Some people say 1. Archie says that it depends. Reynaldo says it's 8 lots, right? Malcolm says it depends on the range that is traded. Daniel, very interesting. Based on 1% risk per trade, you do 1 lot. So thanks. Yeah, it's nice to see everyone participating. This makes it more fun, right? So a couple of you, and I'm really glad to see that. A couple of you do realize that this is actually a trick question, right? It's actually a trick question because before you know what is your ideal lot size, you need to know how much you want to risk and where is your stop loss distance, right? For example, if you are going to risk, let's see, I have my pen over here. I'm just going to use a different color so it's easier for us to see. If you have, if you use a lot size of 0.3, correct? So, a lot of people say, okay, it's 0.3 lots, right? And then your, if you had a stop loss of maybe, if your stop loss was 10 pips, right? If you had a stop loss of 10 pips, maybe you're risking maybe $30, right? But if you have a stop loss of 100 pips, right? A lot longer, you have a stop loss of 100 pips, you might be risking $300. So the ideal lot size really depends on how far is your stop loss going to be. That's the first criteria. And the second criteria is how much you're going to risk on each trade, right? So are you going to risk 1% on a trade? Are you going to risk 3% on a trade, right? So yes, it's a trick question. If you had answered 0.1, 0.31, or even 8, right? We need to rethink that. And this is what we're going to teach you in trade management. It's not about every time you're on MT4, you see a trading strategy, you put in 0.1, 0.3 lots, because if how far your stop loss is going to affect your how much you risk on each trade. So if we really want to exercise proper risk management, we need to factor in not only the lot size, but we need to factor in the stop loss distance and the percentage you're risking on a trade. Okay. Now, let me clear my erase drawings here. Okay, so next thing we're going to look at, right? What is your ideal risk per trade? So this is an evolution of the question I asked earlier, right? So there are more correct answers to this. It's not a trick question, but all right, what is your ideal risk per trade, right? You can say it's more than 10%. There is no wrong answer here. Rather, this is more a case of understanding the risk tolerance of everyone. Can we just take a quick minute and type in your answers over here, everyone? Yes, Imad, it depends on your risk appetite. So what is your risk appetite, right? So Danu has came up with a very interesting answer. 10% if you have a very good success rate, right? So yeah, if that is a very interesting, your success rate will affect this a lot. Okay, 2%. So we got a lot of people, an overwhelming number of people who say 1 to 3%. We got the odd 1 and 2 or 3 kind of responses that say 10%. But yes, a lot of people are revolving about 1 to 3%, and that is a very good answer, because when it comes to trading, right, there's one thing that we all understand, and that is the law of large numbers, right? The law of large numbers. It's It depends on the amount you have on the account. You lost dollars to find your trade. Yes. So it really, a large chunk of it, right? You first, let me establish one thing. If you have an unprofitable trading strategy, it doesn't matter if you have the best risk management in the world, right? You're still not going to make money, right? But let's just say, you know, you have a trading strategy that just beats the market by maybe 55% to 45%, right? That, you know, that gives you a small edge over the market, right? And imagine, right? So for those who have answered anywhere from 5 to 10%, right? Imagine you have a trading strategy that for every 10 trades you do, you win 6 of them. All right. So for you have a 60% chance of winning, right? So in a worst case scenario, right? If you put 10% per trade, right, and your first 4 trades were losing trades, right? So you lose, 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 lose before you start winning, right? Your account will have went from 100% down to 60% already, right? And even if you win the next 6 trades, right? So imagine you win, you get 66%, because you win 10%, sorry. So 10% of 60% would bring your original amount up to 66%. And you just keep increasing that another 6.6 an hour. Even if you win the next 6 trades, you would barely be able to go back to your first 100%, right? Or maybe you just go a little bit above that, right? And if you have another bad run of losing 10% per trade, you're gonna find yourself, it's gonna be very difficult for you to dig yourself out of that hole, right? So when it comes to trading, one thing you always notice, and this is why I'm using the picture of a casino, right? Imagine we're in a casino, right? And we go to a roulette table, right? We go to a roulette table, and you start, you start gambling a bit. You can bet on black or red, right? So you just bet on black, 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 and maybe for 5 times in a row, right? 5 times in a row you win, right? The owner of the casino is not going to come down and say, hey guys, let's close all roulette tables, right? This guy has won 5 times in a row. We better cut our losses, right? You won't see that happening, because the casino knows that they have in a roulette table, maybe they have a 52% chance of winning versus a 48% chance of losing, right? These are very, very thin odds, right? It's very, very thin, maybe a difference of 4% each, right? You might win in the short run, just a couple of wins, but they know that over, if everyone comes in and you use a law of large numbers, right? They're going to win in the long run, right? And yeah, Imad gave a very good explanation. It's like you flip a coin 5 times, 10 times, you might get hits 8 times, right? And you think that, wow, there's something wrong with the gravity or coin, right? This coin is biased on the heads, right? But if you flip it 100 times, it's much more. You have a much higher chance of it landing on 50-50 between heads and tails. Law of large numbers. Okay, so it's important that everyone knows this. So let me go on to the next exciting thing, which is lot size calculation, right? So we have $50,000, 1%. Oh, sorry, yep. And now is where we're gonna take the chance to, yep, here we are. So we are on Aussie franc. We are Aussie franc over here, and let's just say that we want to take a trade on Aussie franc, right? I'm gonna put some key points here. Our entry is over here, right? I'm not sure if you all can see it, is 6590. Our stop loss, we're gonna put it slightly above here, right? It's 6627. So I think that is 37 pips. Our account is a $50,000 account. Okay, so I'm going to write this down here, right? So we have 37 pips. Yeah, we have 37 pips stop loss, and we have a $50,000 account, right? If I want to risk 2.5% of my account, on this trade, right? What is the lot size I'm going to use for on Aussie franc? Remember, we're referring to Aussie franc, and we are trading in US dollars, right? What is the lot size for this? Fastest finger first. The person who's able to answer this will get a prize from me at the end, right? Just like last time. So okay, how many lots do you need to risk exactly 2.5% of your $50,000 account, right? So I think 2.5% is, I don't know. I'll figure that out later. Okay, we got some answers coming in. We got answers. I'm not going to say them yet. So yeah, it's equivalent to 1250 exactly. You are right, Spectrum. Yeah, so we want to risk $1,250 with this 37 pip stop loss, right? What is the lot size we need to use? Getting a lot of answers coming in. That is great. Everyone, I want you to participate here, right? Just take a minute. I know some of you guys are getting on to searching for online calculators, right? So Gualberto, right? Where to participate? Just type it in here. Just type your answer in here, right? We got some answers with 3.4, some with 3.21, some with 1.25, right? So are you risking the correct amount, right? This is this is the part where you all should experience the process of really calculating what is the lot size. Okay, so 37 pips. We have an overwhelming number of answers coming in that revolves around the 3 range. We got Daniel who just put in 3.37. Right, remember, trick question, we're using USD. Okay, we're using USD, and this is on Aussie franc, so it's not Aussie dollar, it's on Aussie franc, right? And Imad, don't worry, I see your answer. I think yours was the first answer with 3.21, so interesting. Okay, now, all right, we are going to find out the answer, right? So we are going to put an entry over here at 0.6590. I'm going to disable the rest of it. Those who attended my previous webinar, you have known what this pretty cool tool we have. It's called the Ultimate Trade Manager. It's an awesome tool. Let me show you why. And our stop loss, we're going to put it right about there. Okay, 278. We are risking, how much of our account are we risking? We are risking 2.5%. And the correct answer, right, to get really, really close to that, I'm just going to put this as 1250. Let's see if we risk 3. A lot of people said 3.21, right? 3.21 would risk $1,284. Okay, so if you really want to risk 2.5%, your lot size is actually 3.12, right? And that will take you close enough to 1248.96, right? Just let me ensure that my stop loss is exactly 37 pips. Sorry, I'm just going to move this to 37 pips. This 37.5. I got to zoom in again. Sorry, I just got to zoom in again, right? Because it seems like yeah, I got to zoom in again. Our entry is over here, and we are risking 37.1. Okay, 37.1. Okay, 3.2. All right, so I guess the correct answer was really 3.21. Right. And Imad, hey, you're cheating, man. I realize Imad has the Ultimate Trade Manager. He won it previously. That's why he got it so fast. But don't worry. Right. If you want another one, we can give it to you. Right. I have a feeling, right? Can some of you guys, whoever has the Trade Manager, can you just type it in here? Like who has the Trade Manager already? Because I think we gave out a couple of copies previously, right? So if you have the answer, no, if you have the Trade Manager, can you just give me the heads ups and say me or something? So I know who kind of has it. Right. Tony has it, right? Emad has it. We have a couple of people. Yeah, we have a couple of people who have it. And if you don't have it, you will realize that yeah, it's okay, okay. Okay, we have a couple of people. Okay, I'm getting pretty funny answers in. But anyway, let's not digress. We have the entry, stop loss, and we can move the take profit to anywhere we want, right? And what you notice, what I'm going to show you over here is something very interesting, right? So a lot of us think that, right, having a fixed lot is the answer, right? You think a fixed lot is the answer, right? How much should you risk per trade? We have established that in our very first slide, that there is no correct answer to that. Correct? I'm just going to show you. I'm just going to further emphasize that to you here, right? Okay, I'm just going to take note of the winner. I believe it's a close fight between Emad and Daniel Abbott, right? Who both answered 3.21, right? Followed by Tafatsua, right? So we'll take note of the winners and be sure to tell me in case I forget later. But anyway, just let me show you something, right? So imagine our entry is, I'm just going to delete these numbers. I'm just going to delete these lines, okay? Right? So our entry and stop loss is 37 pips apart, right? If you had a fixed lot size, right? A lot of people said earlier, okay, one lot, right? If you're just trading one lot, you'd be risking $390, as you can see over here, right? But if your stop loss was further away, just say a stop loss was at 100 pips away, and you were still trading one lot, you would be risking, instead of $300, you'd be risking $1,100, right? So it's important for us not to place a fixed lot size on every single trade, right? Because depending on how far your stop loss is, this really affects how much money you're risking, right? So guys, remember, before you even take a trade, ask yourself how much you want to risk on this trade, and then reverse calculate your lot size from there, right? So how I usually, so if I want to share with you, right, how do I take a trade every day, right? I will come in and I'll do my analysis, right? Maybe I'll do a little Fibonacci retracement from here to here. I realize, wow, a very nice 61% is with a swing high resistance. I'm going to sell. My entry is going to be over here, right? Where's my stop loss going to be? There's this very big, nice big spike over here. You know, some people, those who attended previously, they know that this is an overlap resistance. I'm going to put it beyond, slightly beyond, all right? And because there are two levels up here, I'm going to risk, instead of risking 1%, since there are two levels, two elements, I'm going to risk 2%. And my stop loss, my lot size is 1.87. Click place trade, and there you go. We have a trade that is risking super close to 2% of our account, right? So that is the structure to deciding how much you want to put per trade. It's not just coming up with a number 0.1, 0.3, 0.5, one lot, two lot. It's not just coming up with that. It's really looking at the markets, seeing how far your stop loss distance is, right? And then reverse calculating from there. And always know that the market is telling you different things. So as the market tells you, and you want to readjust your stop loss lower or higher, right? That's equally important, because once you move your stop loss higher, you need to readjust your lot size, right? You need to readjust how much you are risking on the trade, and you realize that your lot size changes too, right? So the concept of risk management is not so straightforward, right? It really revolves around ensuring that yes, distance, risk tolerance, and how much to risk, right? So this takes us to our next topic, right? A structured approach. Okay, a structured approach to deciding how much risk to trade. So earlier we had the question, what is your ideal risk per trade, right? A lot of you guys, what's the word for it? A lot of you guys decided it is between 1 to 3%, right? A lot of you guys really decided it's between 1 to 3%. But if I really were to ask you, hey, 1 to 3%, right? So Is it 1? Is it 2? Is it 2.5? Is it 3? How are you going to decide whether it is within 1 to 3%, how much are you going to risk? All right, and this is where it takes us to our next question. And don't worry, Imad, right? I love your participation, right? So yeah, just I'll look at the question. Of course, I won't answer everything, but yeah, just feel free to ask questions along the way so that I can answer them. Because trust me, we will not have time at the end of the webinar to really rewind and look at previous slides that we covered. All right, so we have a question from Mubi asking how to manually compute how much pips to risk, right? So what I showed you earlier was the trade manager, but I guess if we really want to compute, we will go to our good friend google.com, right? And I would type something like lot size forex calculator, okay? And maybe you go to my FX book, is the first choice up there. And so this is how someone says, okay, what is your account currency? It is USD, right? What is the account size? It is $50,000. What is the risk ratio percentage? It's 2.5. What is the stop loss in pips? I kind of forgot. I think there when you go back and I need to count, I think it was like 37. Oh, yep, 37, that's right. So I need to go back here, say it's 37 pips. What is the currency? Aussie franc, right? And then we calculate. There you go, 3.21, right? So every time you want to take a trade, right, you need to ensure that you select the correct base currency. You need to ensure, you know, it's not every time where you have 50,000. Sometimes it's like 47,350, right? How much you want to risk, right? You can risk based on how much money you want to risk to, but usually I risk based on how much risk. You need to calculate the pips properly, pick the correct currency pair, and then click calculate, right? Then from there, you know that, okay, the lot size is, okay, if it's 50,000, the lot size is 3.21. So I will come to MT4 and I will click, all right, let's do 3.21 pips, right? How would I do that? I will right click and I'll click trading. I'll click sell limit. Oh shit, sorry. I mean, shoots. Trading, and we want to put a new order, right? Yeah, Mubi, that was the way I answered. So Mubi is asking again, how to calculate proper stop loss depending on the percentage. So this is where you type in your percentage. 1%, 2%, 3%, this is where you type in. All right, so earlier we said 2.5%, and that gave us the answer that you need to risk 3.21 lots, right? And if you load MT4, you need to say, okay, it is 3.21 lots that I'm risking. My stop loss is, okay, so this is the part where you need to check. How do I calculate? So see, that's the problem. This is why I have a love-hate relationship with MT4. I don't know the price. I know it's 37 pips, but I don't know what is my stop loss price. So I need to close this. I need to come back here. I need to see, okay, I think my stop loss price was 0.66174, right? So I need to right click, trade, new order, 0.66174, I think. Take profit, I will do it later, right? I'll do a pending order. And shucks, I think it's a sell limit, right? I think a sell limit at price. What would be my entry so that my stop loss is okay? So you can see it's super frustrating, right? Yeah, no, it's not plus 37, it's minus 37, right? So I need a minus 37 from here to get my original entry price, and from there, risking 37 pips at 3.21 lots would help me risk exactly 2.5% of my account. So I need to take 0.66174 and minus 37 pips. So so 17 minus 20 will be 0. 6580, I think, right? And just place it there. Okay. Now, if I move over, why am I risking 1264? Yeah, I think that's 1264 is close to 1250, and that is how you you place the trade on MT4, right? If you and that's also why, right? Going back and forth, sometimes typing in the wrong number and here and there. And imagine if the market moves and we decide that we need to move our stop loss slightly higher, right? Suddenly, if I move my stop loss higher, I'm risking $1,900, and that is not 2.5% of my account, right? So I would need to go back to the drawing block. I need to right click. I'll say, you know what, let me modify this. And I'm like, oh shoots, I can't modify the volume, right? I can't modify the volume. I need to delete my order. I need to go back to my little my FX book. I need to recalculate the lot size, and I need to go back and key it all over again. That is a real pain, right? That is a real pain to do, right? Which is why for us, we make it so simple. You want to sell, your entries over here, you move your stop loss however far you want, type in your risk percentage, 2.5, and you place your trade. There you go. You're risking exactly 2.5% of your account on that trade. Move it up, move it down, you can adjust it as you wish, right? So I can understand why some people just prefer to have a rough estimate or guesstimate on what is the correct lot size, because it can be very tedious, right? So Vera just mentioned that she can't hear me anymore. Can everyone hear me? Can you just yeah, if you can hear me, can you just please type in and say whether you can hear me or not? Okay, cool. Everyone can hear me. So Vera, I think something is wrong with your speaker. So yeah, now you can hear me well. Okay, no problem. No problem. Okay. So now moving on, right? A structured approach to deciding, right, how much we should risk per trade. So this is a roulette table, right? It's one of my favorite games, right? One of my favorite games, right? There is black and there is red, right? So in roulette, you can choose to bet on black or red, right? So who can take a guess, right? If you bet like if you bet on red, what is your percentage? What is the probability that you will win if you bet on red or if you bet on black, right? Can anyone take a quick guess? What is the probability that you will win, you know, if you bet on all red or all black? Okay, so we're getting a couple of answers here. A lot of people say 50-50, right? But the thing is, yes, it is very, very close to 50. There is the stupid problem here that there is a green here, right? Because if it lands on green, you lose, right? So you maybe have a 48% chance of winning, right? Because if it was just red and black and we didn't have the green here, right, you would have an exactly a 50% chance, right? But because of the green here, that is how the house will have the edge because of this, right? The house will have the edge. Yes, Gualberto has came back with 48.39, right? So all right, so we got 48.39. Very accurate calculation from Gualberto is 48.39% chance of winning, right? If you bet on black or red. So imagine this: you have 100% of your account, right? And Forex was changed to roulette, right? You can only bet on black or red, right? In terms of risk management, guys, in terms of risk management, how much would you risk betting on black, for example, knowing that you have a 48.39% chance of winning? How much would you bet on black? Guys, let's see your answers. Take a guess over here. How much would you bet on black if you had like what's your percentage of your account you would bet on black in a roulette game? Getting some really interesting answers, guys. This is all part of the thought process, right? So think about it. Okay, so some of you guys are scaring me a bit. You're saying you're going to put 50% of your account, 52% of your account. Some of you say still 1 to 3%. Right, I love Malcolm's answer and Lee's answer, where they say there is no mathematical age in winning here, so you won't bet anything at all. Well, that technically would have been my ideal answer, right? If there is no chance of winning, you shouldn't be trading, my friends, right? If you have no chance of winning, right? Even if you win is, you get the same amount where you win, you should not be placing a trade. Okay, so that is the thing. Firstly, if you don't have a mathematical age in trading, forget it, right? That's not a strategy. Like I mentioned, you can have the best risk management strategy ever, but you're not going to win, right? So let's just change. So let me change the condition. So let me change the condition, right? If I'm going to take my little pen here, I'm going to take my little pen and I'm going to color, right? I'm going to click this and I'm going to color this entire thing red. Okay, I'm going to color this entire thing red. All right. So now that this is red, so we have we likely have a 52% chance of winning, right? For if we bet on red, we have a roughly a 52% chance of winning. Okay. Now, if you have 100% of your account, for each time you roll the dice, how much are you going to bet on red? Guys, please, please try it out. Now you have a mathematical age. It's not a trick question anymore. Okay, you have a mathematical age to and your strategy is profitable, right? So how much are you going to bet on rate? Right, we got some answers coming in from Malcolm again saying 1% because it's a small age. Lee Darker says that it's not big enough an age, so he's not gonna risk any money on it, right? And this nothing wrong with the answers. It's really quite logical, right? Some people are going to say 2%, 1 to 3. Guarboto, you're saying you're going to risk 26% of your account. That scares me a bit. I hope you don't do that. Please speak to me after this, right? You're making me a little bit worried, right? Some people say 5%, yeah, 2%. I still have not bad. Still have a 75% chance. So Spectrum is waiting for a 75% chance before he bets, right? But most of your answers revolve around 1 to 3%, and that with a winning rate of 52%, what you need to do is you need to ensure that the law of large numbers work in your favor. So you want to bet smaller trades. There is nothing wrong, right? If you're playing roulette and it is as clear as roulette, that means there is no stochastic, there is no RSI, there is no candlesticks. If it's as clear as roulette, right? 1 to 2% would be the correct amount. You need to last the long run, because if you bet something like 20% of your account and you happen to lose 4 times in a row, which happens pretty often, right? You have blown almost your entire account, right? So there's one guy here who knows about the Kelly criterion. Very, very nice, right? This advanced, a little bit more advanced way of trade management, right? Which we'll go into that probably in another webinar. But for those of you who answer 1 to 2%, yes, right? So you realize as the odds go up, you would increase your risk allocation. Now I'm going to show you a roulette wheel, which I have, which is pretty cool. Okay. What about this roulette wheel? Okay, this is my special casino, right? This is my special casino where the majority of them, right, out of 37 numbers, right? You only have, let's see how we can pick this. Right, out of 37 numbers, you have 32 of them you can win, right? So you have a 32 over 37% chance of winning. Okay, can someone do the math for me? You know what? I'll just do the math. 32 plus 100. You have an 86%. Yeah, that's right, Daniel. You have an 86% chance of winning now, right? So you have 100% of your account, right? So this is your normal 100%. How much are you going to bet on black? Can I get some answers from everyone? How much are you going to bet on black? Oh man, I only see some people still putting 5%. Come on, you have an 86% chance of winning. You're still going to put 5%? Ivan, you only want to put 1 to 2%? Even with an 86% chance of winning, every time you bet on black, right? Are you still going to risk 1% on the trade? Right? Looks like we have people who are very risk adverse over here. There's still people, okay. I think 5% is nice. I love the answer 5 to 10%. 25 to 30%, yes, right? We're getting a lot more people who are suddenly what was previously 0.5 to 1%. Now I see 5, 10, 15, 20, even 30 to 40%. Mark Ching just came in at 50%, right? So that is the truth, right? The higher your odds of winning, the more you would bet. The more you would bet. So isn't that the same as trading? Right? Isn't that the same as trading? So a lot of people think about it that they look at trading. I'm just going to erase some of my drawings over here, right? A lot of people look at trading as binary. I'm using the highlighter, sorry. I picked the wrong pen. A lot of people see trading as binary, 0 or 1. Yes. So Crystal, yeah, there's nothing wrong with putting 5%, right? It's as long as what you're putting here is more than what you're putting in the previous slide, right? So what we have established is that the higher your chance of winning, the more you're going to put into trading. Not trading, sorry, you don't trade in the casino, but you gamble, right? So it's the same thing with trading, right? But the problem is that people see trading as binary, right? When you're taking a trade, you just think, okay, do I take this trade or do I not take this trade, right? A lot of people look at it that way, and there is a problem with that, right? Because trading is not binary, right? Trading is not just a case where okay, setup is good or okay, setup is bad, right? It is the same way as roulette, right? Where or rather the roulette example we gave you, sometimes the odds are almost 50-50 in your favor, right? If it's 50-50 in your favor, right, then maybe you can put like 1 to 2%, 1 to 2% on the trade. But sometimes, right, imagine if you have in a trading strategy, right? I'm gonna let me see if I can use a different okay. I'm gonna draw a box here. You have one for your trading strategy to be successful, you need to have 3 boxes that are ticked. Okay, this will form the foundation that okay, right, these 3 elements are there is a trade that you can there is a trade that you can take. Okay, and then there should be additional boxes, right, that increase the these are the like on the roulette, these are the additional black stuff that you see, right? There could be additional boxes that if the criteria is met, right, if the criteria is met, you will start to risk more. So what I can share with you here is that if all 3 criteria is met, the bare minimum criteria is met, you're going to risk maybe 1% of your account, right? And then if an additional criteria is met, you're going to risk 1.5, Another one comes up, you're going to risk 2.0. Another one comes up, you're going to risk 2.5%, right? Trading is not just yes and no. It is no followed by yes, and really good yes. This looks much better, and this is a very, very nice setup. I know a lot of you, one of the biggest feedback I got from everyone is that my drawing is terrible, and it still remains terrible. I'm sorry, right? So please bear with me here, right? But that is the concept which I'm trying to share with everyone, that trading is not binary yes and no. We need to find ways to know that sometimes the strategy just meets your bare minimum requirements, and sometimes it fulfills a lot more to allow you to allocate much more to your trades. Yes, and yeah, Narinda has a good point, right? It's results is not binary too, which is why trading is not binary, which is why in the law of probability, right? If we just go to something which we are all very familiar with, the concept of risk to reward, right? When the odds are in your favor, don't hold back. If I told you guys, everyone, right? So imagine this example over here. If you only had one chance, right? So let's look at it from a different point of view. You only have one. You can only bet. You can only play this roulette game one time, right? You can only play it one time. That means once you play this roulette game, you're going back to your old roulette, right? The one where red and black are all equal numbers. How much are you going to bet out of 100% of your account if you only had one chance to play this? Can we get some answers? Yes, bet on the black. Please don't bet on the red, Converto. So imagine, right? You have $1,000 in your hand, right? And you see this roulette table. The guy comes up to you, say that you have an 86% chance of winning, right? How much are you going to put? You only have one chance of winning, right? I can see Stephen Bryan putting in 100%. Rivera putting 40%. I don't see anyone putting 1 to 2% now. Okay, now Narinda's at 2%, right? Muhammad Aman is still at 2%. Now I'm asking you guys, you have an 86% chance of winning, right? The odds are so heavily in your favor. Why are you risking 1 to 2% of your 1 to 2% here? When you go back to the normal roulette table, right? And then you need to risk 1 to 2% again. If the odds are in your favor, yes, Tony, right? Put in more. So Narinder is saying, I would bet 2% all the time, as out of 100 trades, 40 normally go wrong and 60 could go right, right? So Narinder, that really depends on your trading strategy, because when you look at this roulette table over here, you're not going to win 60% of the time, right? You're going to win 87% of the time because so many of them are black, right? So if the odds are in your favor, yes, I see a lot of people who are putting 10%, 40%, 50 to 70%, and a couple of you even said 100%, right? If you only had one chance, right, you would, and you see a good opportunity, right, you allocate more of that risk to your trade. So it's the same thing, right? If the maximum amount you have, you would be willing to allocate to a trade is, okay, yeah, if the maximum amount you are willing to allocate to a trade is 3%, right? If the maximum amount you're willing to allocate to a trade is 3%, right? If it meets the minimum criteria, yes, you can put 1% on it. And if it meets all criteria, the additional criteria, you can risk the full 100% of the 3%, right? So I'm not asking you to risk 100% of your account when you see a nice trade, right? Rather, you can risk the maximum amount up to what you're comfortable with. In this case, if you're comfortable with 3% as the maximum amount you want to risk, right, then yes, risk 3% on that trade, because the criteria is lining up very well. If there are more things in your favor, go in bigger. If there are less things, right? If only the bare minimum requirement is met, then you can hold back a bit. Okay. Now, look at that. We are almost through. 1 hour is almost up, so I'll try to cover more that I can use. Methods are used to determine how nice a trade setup is. Okay, so I believe we will cover more of this in future webinars. All right, we'll probably cover more of this in future webinars, but I do want to show you some of the methods that the institutions use. Right, you notice that it don't include some stuff like Heikenaishi. It doesn't include. There are a lot of different studies out there, but the ones that I realize tend to work pretty well for me is Fibonacci extensions, Fibonacci retracements, support and resistance areas, supply and demand. In the previous webinar, I shared the concept of pullback, overlap, and swing low support and resistance levels. Correlation, very, very important, right? Because correlation holds the secrets to a lot of things in trading, right? So what I mean by correlation, okay, now it is quiz time, and whoever gets this right gets a present. Gets a prize. A prize, I mean a prize. Yes. Okay. If, right? Let's see who understands correlation. If euro dollar goes up, what currency pair tends to go down? Fastest finger first. I see the answers coming in. I said currency pair, I didn't say currency. Mark Ching, you gave me a very interesting answer. If euro dollar go up, then dollar euro would go down, right? You are not wrong, but that's just flipping it around, man. That's just flipping it around. That's cheating, right? Right. And no, it might not any currency pair that is quoted against USD, because Aussie dollar, right? Aussie dollar might still go up. So the correct answer, which a lot of people answered correctly, was dollar franc. That goes pretty closely with it, right? Every time euro dollar goes up, dollar franc tends to go down, right? So we can take an example. We can take a look over here to see what it means. This is the euro dollar chart, right? I'm going to compare. I'm going to add in dollar franc. And I have no idea how I'm going to change dollar franc to a bar chart, right? So can you see? Let's go on the 4-hour chart. See, look at the way it behaves, right? They almost move in opposite directions, right? So that is the concept of correlation. Euro dollar go up, dollar franc will go down, dollar franc, one goes up here, one goes down here, right? So if we're talking about correlation, right, and we say that there's a chance that if there is a chance, right, if there's a chance that euro dollar is going to bounce up from here, right, that means I need to look at dollar franc and look for a chance for it to go down, right? Because they are supposed to move in opposite directions, right? Sorry, that's a terrible drawing. Yeah, but they're supposed to move in opposite direction. One goes up, the other goes down, right? So what happens if, according to my analysis, I notice that, okay, euro dollar is going up, and then I do my analysis and I realize, oh, dollar franc is going up, right? Darius, there might be a little bit of a lag between, depending on the correlation, but usually not that much of a lag between. As you would notice in many of the cases, right, is they move very closely together, right? So if I realize that with these negatively correlated currency pairs, one is going up and the other is going up, what does that tell me? One of them is gonna be wrong, right? Either euro dollar is wrong or dollar franc is wrong, right? And this is one thing I hear a lot about, a lot of this analysis, a lot of these analysts out there. they'll put an analysis saying euro dollar is going up and dollar franc is going up, right? At the end of the day, one of it is going to be correct, right? Because they move in opposite directions, right? So they always have something to say. Oh yeah, look at me, I got it correct yesterday, right? It's almost as if it's the same thing as taking a buy and sell on the same currency pair on euro dollar, and at the end of the day you say that, oh, I made money because euro dollar rose, and then you just don't care about the other position because it lost money, right? But anyway, one of the things that you need to look at with correlation is that, yes, look for currency pairs that are strongly either positively correlated or negatively correlated, right? And then from there you can it's like if you're looking, the currency market is like a jigsaw puzzle, right? It's like a jigsaw puzzle. If you only look at one corner of the jigsaw puzzle, right, you're not seeing the bigger picture, right? There's a much bigger picture everywhere, right? And you're only looking at one corner. You're like, oh, look at me, I'm a euro dollar trader, right? I only look at euro dollar, and you only look at euro dollar over here, and your entire reality is euro dollar over here. You don't realize that the markets, right, the rest of the markets over here, they move in tandem, right? You move in tandem with the so you need to actually look beyond euro dollar. You need to look beyond euro dollar, and that gives you a much clearer picture on where the markets are heading, right? And so we got a question from Mark. How do you go about calculating correlations with currencies, right? Maybe we'll cover this another day, right? We're having a pretty long study session with AxiTrader, so I believe it's at the same time every Thursday. So tune in and we go on this journey of learning trading together. But yes, currency correlation, right? I believe my FX book should be one of the ones that I prefer better. Or you can look at, I'm not allowed to click this, sorry, it's Oenda. So we are in AxiTrader, so I'm not going to refer there. Yeah, in this case, right, you can see, all right, if I want to compare Aussie CAD, right, what are the top absolute, what is the most positive and negative correlation for Aussie CAD? So you notice Aussie CAD and Aussie Sing move very closely together. Aussie CAD and Aussie dollar move very closely together, right? But Aussie CAD and Euro Aussie tend to move in opposite directions, right? So you can toggle the different time frames here. So let's just say for the past 1 month, right? It's interesting to see that Aussie CAD and Euro Aussie has been negatively correlated very strongly for the past 1 month. And this is where you can get like the absolute values for your correlations. And there is a concept behind trading, the divergence in correlations, and using correlation to really fine tune your trading. But that's a more advanced kind of trading methodology. I don't want to digress too much into that, but what I do want to show you is that yes, we have correlations, we have stochastic, we have RSI, which there are hidden ways that I want to share with you, but I guess we don't have time to cover that today. So I'll cover that in the next lesson. Thank you once again, everyone. It's always great to have you guys. I'll be around next Thursday, and we'll be going through more awesome trading tips, right? It's really I think it might not be on trade management anymore. It'll be on some stuff a little bit more exciting, like trading strategies, right? And so that's it from me, guys. Cheers and peace out.